Hi, everybody. Okay, these two fine gentlemen need absolutely no introduction. Ivan has been a close friend and mentor for me personally since I got into the business, and gives me an opportunity to thank him. But I think everyone in this room knows who Ivan is, knows what he's done, and the impact he had on this industry. Barry, as everybody knows, is actually the son of a Holocaust survivor, built up a unbelievable business managing over $60 billion in assets today. And we are looking forward to these two fine gentlemen giving us insights on today's world marketplace and some good advice.
I just want to say thank you, Stephen. You've put together an unbelievable conference, and Barry, I'm so glad you were able to join us here. And you're one of the few who will express his ideas with clarity, and without worrying about what the response is going to be. So why don't we just open it up?
Do we have to? Sorry, I was late. I went to the closed Doral on the beach. So
he was really trying to buy it.
It did occur to me. My secretary put in the wrong address, so we went to the wrong Doral. But it's nice to see you all. What do you want to talk about?
I think everybody.
By the way, we're a $100 billion asset manager. We just passed $100 billion. So.
I think that we are in one of the most unusual environments that I have seen, and we've seen many, many cycles. And I keep wondering, why are we in this position? What happened? And then I remember COVID, stimulus. I think it changed the whole world. And everybody wants to know, where are we? Where are things going? And you have such a macro view of the world. So why don't you give us your perspective?
So, in March of 2020, I was on TV and I said, be calm because the governments of the world will overdo. They can't afford for the Western economies to collapse. They'll print, and keep printing. And that the world's medical resources would come together with a vaccine. This is March 16th of 2020 when the market was ending. I had spoken to Paul Tudor Jones the night before because I was going on TV, and he's a friend and a mentor, one of the world's great traders. And he didn't call me back till 11:30 p.m. And I woke up and I saw it's Paul. I looked at my phone. I took the call. He goes, "It's the end of the world." I'm like, I really shouldn't go on TV tomorrow. I was like, this is going to be worse than the Great Depression. But maybe it was the right thing to do to be optimistic, and I wish I'd gone long the S&P that morning, but in a heavier way than I was. But that's in fact what happened. And the governments, when interest rates fell in the context of printing, all the Western governments, all the governments of the world, the ECB, the European Central Bank, the Bank of England, the Bank of Japan, everyone followed the script. And so we printed $12 trillion of cash and threw it into the global economy. And that money is sitting, $2.5 trillion of excess savings in Americans' accounts. It's actually, the one thing I wondered as you saw the pandemic spread, we have been told for as long as I can remember that half of America doesn't have $400 and didn't have an extra $400 to cover their needs. And yet, across America, you didn't see any food lines anywhere. You didn't see people, there were occasional disruptions in the supply chain, but not much different than it looked pre-pandemic. And now, the behavior of Americans is spending all the money they got. And as you know, there was a timeout. There was a moratorium on evictions. Interest rates collapsed. Everybody went and refinanced their mortgages. The consumer's never been richer. You have most of the markets are at all-time highs or just about all-time highs. There's this small little asset class that my housekeeper is now a millionaire trading cryptocurrencies, which it's legit. He's actually showed me the balance in his account. I was wondering when he's going to tell me he's quitting. But he was telling me about Gamma and Delta and all these things he day trades. He's the best performing money manager I have. And he doesn't have any cash for me. He's making the professionals look like fools. And he doesn't understand earnings or anything about fundamentals. But he does read charts and he sees short squeezes and all this other Reddit nonsense. So it is a unique situation. And there's two stock markets. There's a market, Starwood Property Trust, which is headquartered here in South Beach, announced its earnings this morning. We pay a 7.3% dividend. Our book is $21 billion. We have 60% LTV. We paid a dividend for 11 years, constantly, and grown it in the past. And it's sort of nobody's there to answer the phone when you talk to the analyst community. They follow us, but nobody's paying attention. And then you look at Lucid, which I actually looked at on the way here, a company that hasn't delivered a car and has a $70 billion market cap, and Ford's a $74 billion. I think Ford makes, 2 or 3 million cars a year and has a huge EV platform, which they should just spin out. Obviously, it's got to be worth more than a company that hasn't delivered a car. Having said that, the market can be irrational longer than you and I can be solvent. So shorting this stuff is treacherous, as everyone's found out with AMC and GameStop. So there's a casino, a complete casino society has developed where people are trading off of Reddits and other feeds, squeezing and creating. In my LP conference, I mentioned 2 coins that I discovered in the crypto world. One is called FOMO Baby, Fear of Missing Out Baby. That's actually a token. It was up like 6,000% that week. And the other one has even a better name. It's called Up Only. I mean, how could you lose money with the Up Only coin? So, people are making this stuff up. And that money you're seeing in the watch market, in the art market, in the car market, the used car market. So people are spending unbelievable amounts of money. And my job is to figure out when this ends. Like, what's going to end this? And I don't think any of us were alive in the Roaring 20s. But this has to be the Roaring 20s, right? This is 100 years later. I imagine there's extreme excess. If you own a resort hotel, like the one hotel which we own on the beach, I just look at the bookings for Art Basel. The average room rate is $2,600. Like in 2019, it was $1,400, $1,500. If you want to stay there one night, they're asking for $6,000. I'm so embarrassed.
Janet Yellen says we have no inflation. It's transition.
Yeah, Janet Yellen has her head up her butt. So really, she's an academic. And, what you worry about is Washington. Washington is losing all of its marbles. Maybe it's already lost them, but there are maybe a few marbles left. And the transportation bill, which all of us, I believe, would agree that we need bridges, roads, tunnels, and airports that are stable, and actually it will pay for itself. Having trucks over bad roads and screwed up airports, actually there is an ROE on those investments. Then there's about $400 billion of fluffernutter in that bill, which the government won't spend wisely. So what does the government do wisely? So and then of course we're facing the next stimulus bill, which the elections might have empowered what's left of the moderates. There aren't many moderates left in Washington, and the media, which I'm not sure was as bad as Trump said they were, has actually become the media that Trump said they were. So if it's hysterical on either side, you get attention. If you want to run in the middle where this country is, I'd say the country's kind of center right, slightly right. There's nobody home to talk to. So one side gets you all excited about the chaos of the far left. The other side gets you all excited about the chaos of the far right. Being Jewish, it's actually, we don't like either end at the moment. So, but it's a terrible situation because the nation, 43% of the country is independent. And that's because they were Republicans and the moderate Republicans left, and they left Congress. Bob Corker, I was supposed to speak with him next week. And he was a moderate, he left, right? All the moderate Republicans left. Whether they agreed or not with the owner of this hotel, they didn't want to follow some of his ethics. And then on the other side, the moderate Democrats are tired of dealing with somebody they labeled progressives. They all just call them socialists and communists. I don't like the word progressives. Like, that sounds like the rest of us are stupid or behind the times. Whereas AOC and her colleagues are really not progressives. I don't know where they got. That's a media invention. They should just say they're socialists, which is kind of what Bernie Sanders is. Honeymoon in Moscow. So, it's kind of like, but you can't get any of that through the media now. And the media is unfortunately distorting our lens. So I've opted for ESPN. I don't watch CNN and Fox anymore. I can't handle it. And There's no news there. The news is the AP. There is a website called Blind Spot, and you can download it. It tells you what's going on in the media. It shows you the AP story. The AP is kind of just writes the story. But then the trades decide which stories to actually run. So some stories that don't agree with the themes of the right and don't agree with the themes of the left, they just omit. So you're getting a filter of actual news. Not only the story's not always accurate, but you're only seeing some of the news because they're just trying to pander to their audience. And it's super dangerous, and I don't know how it will end. But, so the big things for me, how it ends, because you might be curious, Taiwan. Taiwan is like a serious issue. And the Chinese know, and Xi is an emperor. And he just took down all the billionaires in China. He said, no more billionaires, Jack Ma. You can play around, but I'm the boss. Same thing to Ant Financial, ByteDance, Alibaba he wants to break up. And I think, he knows that he has 3 years left before Biden or Kamala Harris are replaced, probably with someone new. So I think that's a serious worry. If they're going to do it, they're going to do it soon, like in the next 2 years. Some people, including politicians who I ignore, don't think he'll do it. He looks like he's going to do it. He's got mock, what do they call it? Aircraft carriers. They're practicing on, like, what do they do? Why would you do that if you're not going to attack us? Why would you build islands in the middle of the South Pacific if you weren't trying to shore up your defenses or military place? So that would be tragic for a whole bunch of reasons, because we won't go to physical war, even though we have a treaty. In my view, Biden would never do that. But he'll go to economic war, which of course will hurt us more than it hurts them, because we import a lot more from them than they import from us. And it could create all kinds of tragic bottlenecks. And the bigger issue is semiconductors. Everything we run is on a semiconductor. Your refrigerator, your washer, dryer, your car. And Taiwan Semiconductor is the largest manufacturer in the world. So to his credit, Biden has his Commerce Secretary talking about, we have an emergency supply of sugar, the actual sugar. Like we have supplies of sugar. That's not sugar, but sugar. And we don't have supplies of semiconductors, generic semiconductors that run the country, and they're going to build a plant and have a national oil reserve. We're going to have a national semiconductor reserve. I don't know if we'll have it in time, but that is a serious issue because this country will grind to a halt, including your iPhones, if we don't have semiconductors. Even more important than the precious metals markets, which they've cornered. So I hope we somehow avoid that. The two civilizations seem to be not talking to each other. Sadly, we're in this sort of decline. They're in the kind of the rise. They have a demographic issue, but it's slow. They have 1.3 billion people, so they got a lot of bodies. And we have a failed public school education system that is, you're seeing the consequences of it today in the inequalities that have developed in this country that should have been solved. And by the way, what's happening now with wages is really good. Like the fact that the Soho House took their wages from $14 an hour to $22, that's capitalism. That's the way it's supposed to work. We may not like it, but the hourly people will get paid more for their work. The society will adjust, prices will go up, and it's about time the middle class participated in this, and the lower classes in what we've all experienced, and it's been a great economy. So it's not, even though it's painful, it's probably good. It's good for the country. And it's good for the country that these people are getting employed. The big problem, of course, and I said it on TV a week ago Thursday, or 2 weeks ago, is that the government should pay people to go back to work. There's 10.5 million people, 10.5 million open jobs. I think it was like 11.5, maybe it's 10.8 now. And there's a 300 basis point drop in the participation rate in the employment. About 1.9% of women and about 1.2% of men dropped out between April of 2020 and today. So it's almost 3%, 3 million people dropped out of the workforce, and they're all day trading. They're all hanging out with my housekeeper who's making all this money, and they're probably richer than all of us in the room, but they're having fun. They're probably doing something, and they may be working part-time, collecting the cash, collecting unemployment benefits, and they can work from home, so they're home. So they don't have commuting costs. Until recently, their gas and mortgage bills were good, so now you have a firm, you have ways to buy stuff and never pay for it or pay for it whenever you want. So, the nation the consumer's never been in better shape. And if they do another stimulus package, including the one they just did, it's going to propel this for a while until it cracks. And fear and greed. We're definitely in the greed part. And one day, somebody may wake up and be fearful. And then, Tesla's down $100 today. Does it matter? Tesla's a meme stock. Tesla it's all retail money. Like, it's more owned than Apple, right? I have 3 Teslas. It's an amazing car. I've had it for 10 years or 8 years, I forgot. It's just not worth $1.5 trillion. It's a car company, and it's got other good things, I know. But you can't, the market where a stock goes to 700 and they put a price target of 900, then it goes to 1,000, so they raise their price target to 1,400, it goes to 1,400. That's not a market. That's not analysis. This is garbage. And I've seen it, as you know. The only good news about getting old is you've seen it all before. Right? You've experienced the NASDAQ crash in 2001. It dropped 82%. People had $20 billion market caps, and they sat this far from, were gone in a year. Gone, like out of business. And that will happen again, and I just hope all of you are safe, because it's going to get really ugly at some point, and they're not going to blow a whistle. And you better have your plan B in your hand right now to how would you react to that, because we're all levered long. We may be I call it intellectually hedged. Like, I think the world's going to end, but I'm still fully invested in the stock market or in my hedge fund, right? So it kind of feels good, but then when it cracks, like, damn, I knew it was going to crack. And there's so many signs of wretched excess, it's endless. And it's so painful not to be in this stuff, because your friend is in it, and he just made all this money. My son has a friend who made $1 billion in cryptocurrencies. She can't spell her name, but it's like, wow, it's real money. It should be a different color, right? That should be like a different color money if you made it all in crypto that week. You can't use that at a store. You can use it at Disney World, but it's like, but it's the real same money. And so I don't know. I mean, the political climate's so bad, and we're so leaderless in a time we desperately need leaders. And the nation, I mean, one thing you learned about Donald is the nation wants to be led. All nations want to be led. Like, you like a strong leader. And a lot of people, I think Obama's opening for Trump was, he spent 8 years apologizing for the United States. And Trump read the passion of the American people so well. Like, make America great again. I mean, who wouldn't want to make America great again? And he said it over and over again, and we're going to win so much, it's going to be painful. Like, we like that. We care about who won the football game on Sunday, or who wins the Major League Football, or how the Knicks did last night if you're from New York. So it's like, that's our zeitgeist. Like, we're optimistic, we're innovative. We don't like people telling us we did something wrong. Nobody does. You got your wife for that. So, sorry, wives. I'm divorced. I had a wife for that. 25 and a half years if I did everything wrong. But I love her anyway. So anyway, it is an interesting time, and I think, Biden, I was expecting Biden to be more in the center. I thought he'd probably be a little more center than Obama, and I just got it wrong. I mean, he's too weak to stand up to the far left, and maybe, they got the one bill done. Maybe somebody paid attention to the losses in Virginia and the near loss in New Jersey. And that's the hope, is the moderates get a voice, and we get the country back together. Stop picking at each other. It can't be good for the country. So I think what else could go wrong? I mean, people lose faith in these printing presses. This $3 trillion stimulus package is a piece of shit. I mean, this is there's things we need to fix, like social justice and inequalities, and there is racism. It's not as prevalent as they would think. There's anti-Semitism. Does anyone care if people hate us? Like, a lot of people hate us. A lot of people don't believe in the Holocaust. Like, I can tell you, my dad survived the Holocaust. It was real. But, that's a minority of Americans. A minority of the police force goes into the police to beat up people, but 98% of them are great people servicing us. So the whole rhetoric has to change. And I don't know how it's going to happen, but the faster it happens, the more sustainable this recovery will be, and the better we will be at investing our vast resources in things that matter. We spend so much time arguing about crap that doesn't matter in Congress. It's just so embarrassing as a country. How did I get on this topic anyway? Here, ask me another question. What the fuck? I've never actually spoken to an audience like this. Is this like 100%? I feel like I'm in Israel.
You know, I can't even be provocative because I agree with everything you've said. And you and I never even spoke about it. I think that was one hell of a perspective, and I think everybody has to appreciate that. You don't hear it, and you don't hear it raw, and we heard it raw. It was great.
I've known Donald for, I don't know, 30 years. So, I kind of don't want him to run again, even though it's as a Jew, he was obviously very good for Israel. And obviously the Jews still vote Democratic, even though it doesn't seem like they like us very much these days. But the issue is, to me, having, and I was watching the country, because Donald said stuff that was definitely not true. And I expected that from him. I've played golf with him even here. That's not golf. It's Trump's version of golf. It has nothing to do with golf as you know it. So, kicks the ball down the fairway, misses the green, and I'm like, where are you going, Donald? He goes, my ball's in the hole. But Donald, you hit the ball over here. He hit in the lake at Bel Air when I was playing with him, and he found his ball. It was like in the middle of the lake. But I blame myself for his presidency because we just laughed. We thought it was the funniest thing, and we never called him out on that. Like, if it was your buddy, you'd say, what the fuck is wrong with you? Excuse me. Donald Trump, you're like, oh, you're entertained. He was entertaining. It wasn't that funny when he was president. But he went after the Mexicans, and I can say this to this room. He went after the Mexicans and the Canadians. They're all murderers and mass, crappy people. America kind of was amused and entertained. It could have been the Jews. If it wasn't for Jared in the White House and Ivanka, we're just so easy to pick on. It's not right? And so that dialogue he let out, in my opinion, I know many of you support him blindly, he let the far right out of the box. And that, what you saw, the Proud Boys, he told them to stand down. He didn't tell them to go away. And he brought them out on January 6th. So, the left, two rights don't make a wrong, or two wrongs don't make a right. I mean, the left is insane, the far right was insane, and sadly, this is the hand we were dealt, but we can do better. So the country can do better, and it will. I'm optimistic. I mean, Glenn Youngkin, who's the governor of Virginia elect, is a great guy. He's a great guy, and I listened to George Bush Jr. the other day. I was at an event with him, and I didn't really like him that much in the White House, but he was a compassionate conservative. At least he was principled. So, I think there were some good things, but don't forget the Trump miracle economy was running on $1 trillion deficit without a war, right? He overcut taxes. I got a tax cut. I didn't need a tax cut. 1031 exchanges, those of you who make a living on it, we shouldn't have them. Like, it's stupid. Why do we have those? Why are they for our industry? Like, you shouldn't be able to exchange real estate for tax-free. Now I'm going to piss people off. You're all going to hate me. But you can do that. You can't do it with stocks. I mean, there's certain things that are silly that in the fairness of time, probably don't make a ton of sense. But, I think, so the reforms we could use, the easiest thing they could do is move the federal retirement age back, because we live longer than we used to. And that would change all the actual assumptions on Medicare and Medicaid and all this stuff. And it doesn't have to affect anyone who's alive. Just if your kid is born at 65 or 72 or whatever, and that would save the country hundreds of billions of dollars, but they don't even vote, they're not born. Let's change the law now so, to reflect today's medicine. It was written, I think that was written like when the average life expectancy was like in the 60s. And now it's like in the 70s or 80s. So it's time to sort of update the government and do things wisely.
So clearly we have a lot of fundamental issues. Everybody really knows it, but they're not dealing with it because we're all doing so well, right? You own multifamily properties, as Barry owns a lot, and a lot of people here. No matter what you bought, you're mad at what you didn't buy, right? And it's not like even rents were going up. Cap rates were being compressed. Now you have rents going up and you have cap rate compression. And everybody's like, things can only get better. Well, for me, there are two times in life to be concerned. When everybody says things can only get better, that's the same as when things can only get worse. It's the same opposite psychology, right? And we're almost at that point where everybody says things can only get better. But as you heard from Barry, and we all know it, the fundamentals don't make sense. So what do? Everybody's in a quandary. You got to buy. You want to buy. Everybody, of course, nobody buys a marketed deal. Everybody's buying off-marketed deal. I haven't heard one person here tell me they're buying a marketed deal. Everybody's got an off-market deal. But it's a real issue. And I think now's the time to be cautious. Now's the time to really understand your business, have balance, have perspective. And the one thing Barry did say is, everybody thinks they're not long. I promise you, and when things get tough, everybody's longer than they thought they were. Everybody's much longer.
Most of you survived 07, 08. You know, the only thing that went up in 07, 08 was bonds. But bonds already rallied. Everything went down. Commodity prices crashed. Venture crashed. PE crashed. The equity markets crashed. Real estate values crashed. Everything crashed. So, you know, it will all go the same way. It's all relative to each other. So we own nearly 100,000 apartments, 30,000 affordable and 60, whatever that is, 70,000 market rate. I've never seen anything like the time we're living in. I've been doing this 35 years. I can't even say that word. I think I'm 35 years old, so I must have done it when I was 3. But you know, I've never seen rents. We were looking at yesterday, our head of asset management's actually in Miami talking to me yesterday. I think it's like 30% total increases on new leases in Jacksonville. South Florida is even higher. First of all, it's not sustainable, right? And in the blue states, if you happen to live in one of them, you're going to see rent control. I mean, there's no way the legislatures are going to let you increase rents on poor people 30%, even if they're not poor. So, you know, you're going to see pressures. But this isn't sustainable. You can't actually, you know, so it's gonna, some of it's catch up. I'm astonished. I mean, I would have been wrong 100 out of 100 times if you told me rents could go up 25% and you could hold your occupancies. So so what our biggest fear is interest rates. You know, they seem so calm, but there's so many technical things going on. So many people are short rates, assuming the 10-year was gonna go to 3. It should be at 3. Inflation is roaring and the 10-year's rallying or going the other direction. This is the lowest real interest rates we've ever seen in the history of humankind. It has never existed. The administration is playing so many weird games of the $9 trillion balance sheet. The federal government is playing with the curve. And they continue. I mean, they're going to pull back corporate bond buying and bond. Why were they even buying corporate bonds? It's like it was a Mnuchin invention. The market didn't need it. Maybe it needed the thought that you were going to do it, but they actually did it. So they started, you know, keeping bond yields down. I guess they want to assure the recovery's in place. The recovery's intact. The only issue with the recovery is we need to get the 10.5 million jobs filled. We need to get people back to work in the service economy, and they're sitting at home, and we can't seem to get them to come back to work. I asked I mentioned the hotel, the one hotel, they're short 140 positions. That's like fucking, that's serious. Mm-hmm. And you're gonna have to bring your own sheets for $2,600 a night.
So how
do your own sheets?
How do we get people back to work?
It's the latest invention of the hotel industry.
How do we get people back to work?
I have no idea. There'll be an inflection point, I assume, where they'll run out of savings, or there'll be a bad day in the stock market when their Reddit things don't work. And they'll go, holy, I can't do this for a living anymore. I mean, you know, one of my sons used to trade. And he was trading the early part of Bitcoin, and every dip, you just bought it and kept going up. And then one day it crashed. And he said, I think I'll do something new. So that's going to happen, you know. It's going to happen on a mass scale, that this sit at home and day trade. You have an open casino, and the thing about Robinhood is there's no transaction costs. So instead of going to Vegas, you sit at your computer in the morning and you trade stocks. I get up in the morning and look at which cryptocurrencies went bananas and go, damn, I missed that one. I missed this one. You know, by the way, I have like 1%. It's actually not even, but it's a significant amount of money in cryptocurrencies. And I own Bitcoin, even though it's dumb. It's no dumber than gold. And it's easily, if you get out of your head that this can be bought all over the world, and it can be, you own this thing and they can't make more of it, right? Because there's 21 million coins, 18-something million have been mined. They've never hacked it. And if the world believes this is a store of value and they can't make more of it in a world where, you know, when I went to China a couple of years ago when we started our quantitative easing programs. They called it legitimized counterfeiting. That was the head of the of the Chinese central bank governor said, "You are printing money and it's not fair." Like they thought we were going to be, we're going to restrict this, but we just print money and there seems to be so we keep printing more with no hope of ever paying it back. So the only thing that has some validity in that they can't make more of it is Bitcoin. So, I'm not telling you to buy Bitcoin. I'm just saying like 1% of your net worth. If it goes to $1 million a coin, you're going to be really pissed, right? And it could. I mean, there aren't a lot of sellers because everyone's holding on to it for the same reason I am. I bought it a long time ago, but and the coins. Bitcoin is the biggest, and it's dumb and has no use. At least gold, you can make jewelry, I guess, out of it, but you can't make much out of Bitcoin. I don't know, can you melt down a Bitcoin? The other tokens, some of them are really interesting. Like, some of them have real use cases, particularly in finance. It will impact the lending business. There's a company called Figure that is doing tokenized lending. You'll see these guys take hold. It will change finance as you know it. They are going after the banks, all of the banks, and they're going to succeed in my view. They will go after Visa and MasterCard. It allows you to move money more or less free across border and states and between individuals. The internet is sort of one way, and crypto world, the digital, the blockchain is two-way. And it's basically a recorded transaction for everyone to see. I don't think, again, there'll be risk of a politician outlawing it in the United States the way they did in China, but I do think it's legit. By the way, out of 1,000 tokens, probably 100 are legit. The rest will go the way of the dodo bird. But you have no further to look than Dogecoin or Dogcoin, which is what it was originally called, or Shibu. These are completely worthless coins, but it doesn't matter because people believe they can day trade them. They have no value, no use, and there's unlimited supply. They're just a joke, but it's a $40 billion market cap. Somebody is running around with Shibu coins buying every large yacht in the world today, and they're not saying it's not real money. So, I mean, these things have gotten material. You have to pay attention to these markets. This is another asset class with a $3 trillion market cap today. $3 trillion. It's a stimulus all in itself, except it went to like probably maybe 10,000 people, 50,000 people. I mean, the average American doesn't own a Shibu. Maybe they do. I own a yellow lab. Does that count? Mine eats.
Listen, I don't know from Bitcoin. You've done very well with it, but I think all of us here don't do Bitcoin, we do multifamily, right? The most attractive asset class, the asset class that's huge, that's growing and growing. And everybody keeps saying it's going to get tighter and tighter and tighter. I think it's a function of interest rates. And despite what people say, if interest rates go up, cap rates are going to widen. I think we're in an extraordinarily permanent inflationary period, one that I've never seen in my entire life. You have to make that assessment. If you think this is an inflationary period of time, you have to act accordingly. How do you know? How do you know? Wage inflation? Go cut back people who you gave increases to. I've never been able to do it. Go to the supermarket. I don't go to the supermarket, but my driver tells me. He tells me what happens, how much he's paying for a steak, how much he's paying for eggs. That's real inflation. You talk about the hotel prices of $2,500. That was 6 years ago, $500. This is real inflation, at least the way I'm looking at it. So I think the things that keep me up at night, one thing, are rates going to rise? Are rates going to rise? Do we need rates and inflation to deal with each other? I'm not an economist, but my instinct is that's the only way you're going to create value and control. And that's an assessment we all have to make. And since we're all longer than we think we are, obviously, because I'm doing more bridge loans than I've ever done in my career. I think I've done more bridge loans this year than I've done in the last 5 years. And it's not stopping because people are buying, rates are up, but your risk is that rates rise. Well, and that's what you got to deal with.
The richest people in the world 20, 30 years ago was not Elon Musk. It was the Reichman brothers. And the Reichmans who I knew, they had fixed rate debt when inflation hit. And so rents flew, and they were fine. And our big fear, even we are big buyers of multis all over the country, but we're floating off the curve. We're kind of possessed. We buy caps for 5 years, but if you're a long-term owner, it might be a really good time to look at a 10-year piece of paper, fixed, and then just absorb the extra. If I were you and I was holding some for 10 years, I would definitely do that, at least for a portion of your assets, because the odds are inflation is much higher than the Fed tells you. It's both labor and materials. And don't forget what's happening. They did the transportation bill. What are they going to do? They're going to buy every piece of steel domestically supplied for the next 5 years, right? U.S. Steel is going to be the busiest company in the country, as will Nucor and all these other companies. And behind that is concrete and piping and fasteners. So if you think the construction markets are tight today, and if you haven't paid attention, they're very tight today, it's going to get worse. And there'll be more pressure. And I was talking to the head of a construction firm in Dallas last week, happens to be one of our board members, and he said, he's looking at 2% cost increases a month. And I just looked at something from Berkeley, 13.5% year over year. That's good news if you own stuff today. That's good because rents have to go up to justify new construction. But you better fix your debt. And I think because cap rates will rise if interest rates rise materially. Not 25 bips, but the 10-year goes from 140 to 3. You're not going to have a 3. I think multi-cap rates now are 3.5, 3.25. We sold a portfolio recently of $1.6 billion at a 2.6. It's off the chart. It wasn't even like you're kidding me. And there were multiple buyers. A 2.6. The other thing about beware of taxes, right? This is a very populous country right now, and everyone assumes anyone who owns a commercial real estate asset is rich. Right, you're rich, so we can tax your buildings, right? So real estate taxes are probably the negative surprise of the last 5 years. They grew faster, red and blue states. Going forward, the blue states, I think you have significant pressure on real estate taxes, and nobody's going to cry for you. Homes vote and commercial buildings don't, right? They're not going to raise your house taxes or residential taxes. They're going to go first after the commercial buildings. So multis, I think, are a very easy place for them to look to squeeze value out of those of you who own apartments and make a living in this business. So we try to, Tennessee, maybe you guys don't know this, but during COVID, Tennessee, which is a no income tax state, passed a 35% surcharge on commercial buildings on their real estate taxes to pay for whatever they wanted to pay for. And nobody said anything. 35% increase in your real estate taxes. It was supposed to be temporary. I should check if they actually took it away. But I was like, you can do that? And they did it. And that was a red state. So just watch that, because I think that you're in a new era of paying for things and redistribution. And again, if you're in the multi-business or any asset class in commercial real estate, taxes are not going to go down. And if your value goes down, they'll just adjust the mill rate. So your taxes will stay the same. They will not give it back to you. And and one other thing about New York, because this is really relevant to people who live down here. I have a friend who's one of the top VC guys in New York, and he went to the state legislature, and he said, this business about this whole approach to people, to the wealthy, and the increase in taxes you just put through, I think they went from 13 to 15 for state and city income taxes. Obviously, your national tax rate, your federal tax rate is going to go up too, and you're going to get to close to 60%. Let's leave SALT aside for a second. He goes, you keep raising taxes, you provide less and worse services, people are going to leave. The safety issues, the cops aren't allowed to patrol the streets. People are going to leave, and property values are going to drop, and you're going to have a lower rent roll or tax basis, so you'll have less revenue, and you'll have less police, less teachers, less firemen, and it'll really hurt the city. And so property values will go in a negative cycle. It'll get worse and worse. And they said, we understand. We want property prices to drop. It's good for our people. And he left the state. He moved to Florida. And he was the head of, I won't even tell you what he ran, but he ran a very important organization for the city of New York, and he said, I'm out of here. So beware of politicians. Pay a lot of attention to what's going on with your local politicians, because they could really screw up your P&L.
think that's a great overview. Why don't we open it up to the field and start responding to some of the questions that you may have.
I should have asked if there was media in here. It's a little late for that. No media?
No media.
Thank goodness. Because it's been well, the question is, why is industrial trading at ridiculous? Well, because first of all, what happened post-COVID or during COVID was there were two major asset classes that had no bid, right? So we all have, I have $10 billion, our 12th fund is $10 billion, we just closed it, right? We got to buy stuff. And there's no bid for retail. There's no bid for hotel. There's a very questionable bid for office. Nobody wanted to sell their office buildings at what we wanted to pay for them. So there were two asset classes you could buy: industrial, which was actually doing better in the pandemic as people tried to fill their last mile and fulfill their orders online, and multis. And multis kind of had a timeout during COVID because none of us were bold enough to raise rents on people whose jobs may be at jeopardy. So industrial, though, powered through that. Single family for rent also powered through that and was very successful. And industrial absorption is still higher than construction. I mean, there's almost, some of these cities have 2% and 3% vacancy rates. So until recently, that has been the highest rent growth of any asset class in real estate. And it was year over year over year, 10% increases in rents. It was flying. And so the cap rates reflected the growth, pretty reliable growth in the rents. And you know, we own a bunch of industrial now, but we were late to the game. We were the largest, second largest owner of apartments in the country at one point. So we bought apartments by the bazillions, and we didn't do industrial as much as Blackstone did, and then they turned around, did multis, and were turned around and started doing industrial. But those cap rates reflect the rent growth, and also it's a bond. Like in a world with no yield, like, you know, before interest rates crashed, I was in China again talking to Chinese, and I'm like, they were buying office buildings in Manhattan at 3 caps. I'm like, why are you doing that? Like the 10 years 4. This is a couple years ago. They said, we have enough of your treasuries. Okay, good answer. I didn't think of that. So part of it is that, like, you know, you got to put money in real estate. All that money, you know, just the flow of funds. I've been doing this 30 years. The flow of funds can overwhelm fundamentals, and you need to pay attention to it. And the flow of funds was looking for industrial. It's like, and also offshore capital, like GIC, the government of Singapore's, Temasek, the Koreans, and the Europeans, they love industrial right now. And everyone, now the thing is, they were rewarded with 30 years of declining interest rates. And you're just buying a collection of bonds, right? If that reverses, you have negative convexity the other way, right? So, but industrial's been a tremendously popular and successful asset class, and they're trading in the 3s. Yeah, they're not in the 2s, I don't think, but they're in the 3s.
Yanni?
So Barry, if you have, it's very hard for NOI increases to offset a real rise in cap rates. If you have rental increases, but also tax increases, and if you take it as a given that the 10-year will be up a couple hundred basis points over the next few years, multifamily worth more or less a few years from now?
Did you hear the question? Okay, so let's assume interest rates go up a couple hundred basis points, but rents continue strong, and so cap rates back up. You can actually run the math of what the break-evens are. Rental growth, I think, is always more important than interest rates, because, you know, when you think rents are going to fly, I just think you can't model rents, multifamily rents rising 20% a year for 5 years. It's different than industrial. The guy on the other side is a person, right, and has an income to pay you rent. Industrial, it's Bed Bath & Beyond, or maybe a solvent company like Target. So, you know, it's different. And I think we have to remember it's different. The asset class has proven all of a sudden to be an institutional darling. People figured out how diverse the credit stream is, And you know, the occupancies keep building around 360,000 apartments last 5 years. So we still have a housing deficit. I think it'll be market by market. It'll evolve to, like, you know, the best markets with the job growth, the employment and wage growth. They'll be sought after. Right now, South Florida is, you know, we've been waiting a long time for South Florida to take off. And I was looking at our assets down here. We bought the EQR portfolio in Florida. And, you know, they were nice, but they were pretty much pancakes, if I was honest. Everything else we had was vastly outperforming South Florida, even though I was like, wanted to be bullish on Florida. So whether we were in Atlanta or Raleigh-Durham, Dallas, Houston, Phoenix, they were doing much better. Now Florida's kicking butt, and kind of surprised, but you know, some of the highest rent growth in the country is now here in South Florida, not Orlando and Tampa, but which is really strong, but this is stronger. And that's, I think, jobs coming into the market, companies coming down. There's other issues, you know, there are issues why cities can't absorb people. Like, you have school systems you need, you know, which they don't have here. Golf courses for the CEOs, they don't have here, except I guess they have them right here. But there are other issues. So, you know, it's figuring out where the growth is. That's going to be super important. And what kind of wages are coming into the market. That's going to be very interesting, how that all plays out. You know, we have this thing called a non-traded REIT, which is it's an NTR. It posts a monthly NAV. We're number 2 in the country behind Blackstone. I can tell you they're raising like over $2 billion a month. We're raising around $650 a month. They're raising a lot more offshore than we are. We don't want to actually raise more money than this because we have to put it out. And like, so the two of us are like lumbering gorillas, overpaying for everything. We're not really, but I mean, we're paying a market rate. We're certainly driving pricing on the margin. And you know, I worry about marking down the cap rates for our multi-book. We probably, it's $20 billion asset base at the end of the year. We have raised around $8 billion, I think, for the product. And I'm worried that if we took the cap rates at 4 or 3 3/4 and put them down at 3 1/4, which is probably where they would sell today, you know, we could see a ricochet event. Like they go 3.5. So we've been very reluctant to move cap rates in that vehicle. We are moving rents to market. That's been enough to record a 17% year-to-date increase in value in that vehicle, which is 60% leverage, owns mostly multis, and has monthly liquidity for clients. So it's sold through UBS and Merrill Lynch and Morgan Stanley, and it's a retail product. It's not an institutional product. The 2 high net worths recently put $100 million each into the product, which I thought was fascinating. But they have liquidity. It's looking like an ATM. You get a 5 dividend yield right now. So, you know, it's interesting though, because that allows us to buy much lower IRRs. Like we're looking for 10s and 11s, not 20s and 30s in the Opportunity Fund series.
See, Yoni, I think the paradigm's a little different. Everybody's talking and they're seeing 10%, 15 in Florida, 20% rent growth. So in terms of expenses going up against that rent growth number, you don't pay attention. Traditionally, we've always looked at 3 to 4% rent growth, right? That's always been the norm. 3 to 5, 3 to 4, everybody was happy at 5. I think 3% rent growth today is not what it used to be because taxes, wages, expenses. I think 3% is maybe keeping things even. So I think the outlook has to be somewhat different than it used to be, but you're not going to see 20% rent growth. This is an anomaly. It's driven by certain fundamentals which I don't quite understand. I don't think you can buy stuff going forward thinking that's going to be the norm. People who did buy recently, great. They're going to do exceptionally well. But I think if you underwrite to have 10, 15% rent growth in the next 2 to 3 years, it's going to be troublesome. But I think the typical 3% rent growth, I think it keeps you even with the way life is.
Same is true in hotels. Like just growing 3 or 4%, given wage inflation, you're going to be even at the bottom line. He looked that way, I went that way.
Okay.
Rent growth, do you think that like the rents are going to drop?
Only in the cities that'll have overbuilding, but you know, it's so expensive to build that they have to charge A rents. So it's really the B and C stuff is going to a lot of runway. And if you can remodel that stuff, you're going to make a lot of money probably in these markets. But I don't see a drop in rents. They might correct. They might go to zero, and they might drop 2%, but they're not going to drop 20. I don't see that happening. I don't see how. Well, I mean, it's the nice thing about real estate. Like I talked about those other asset classes, like the stock market. I mean, this is a great time for property, and the whole industry is catching a bid. We haven't seen inflation like this since I started my career. I've been waiting for this for 35 years, so it's really good for us if you own stuff. If you want to build stuff, and we're building on the beach, I'm like terrified. I kept telling my guys, like they show me a pro forma. I'm like, you have no idea what this is going to cost. I mean, we have like 20% contingencies. Well, that could be gone in 1 year, and that was a 3-year contingency, right? So I think construction is really, you got to be super careful. I mean, we're trying to buy deals out quickly and lock up our steel and everything else very quickly, even if we don't have full drawings, because I think you're going to be facing some significant pressure on commodities with the transportation bill. I think the question was like, we have this low vacancy rate in all the country's markets. Where's it coming from? There were a lot of people went home to their parents and all came back at the same time into the multi-market, right? They, like the kids, it happened to coincide with the school year. Everyone thought that the offices people would make them come back to work after Labor Day, so they all got housing after Labor Day. Like New York City shocks me to death what's happened in that market. I mean, my daughter's looking for an apartment, and it's like the rents are higher than 2019. But it's because everyone came at the same time, and you couldn't evict anyone. So you didn't have the normal supply of stuff you normally have in the market. You know, diminished supply. Some landlords did 2-year deals trying to hold people in place, thinking the world was coming to an end in New York. So they just weren't available, like the apartments weren't available. I don't know how that worked in suburbia. We didn't do multi-year leases in our apartment portfolio. We don't own anything in Manhattan in the rental market. So, but it's hard to explain. I mean, it's people came back and hard, and the vacancy rates, and it's national. I mean, it's incredible. I don't think you can find a market other than DC where rents aren't up more than 10%. I think DC proper is like, last I looked was 5, which is awful when Jacksonville is 30. I mean, Jacksonville.
No, but that's an interesting question. Where are they all coming from?
There must have been a hell of a party we weren't at. You have a question over there?
There's the famous saying that you don't fight the Fed. Is this the first time we kind of need to be wary of that statement?
There's a famous saying, you don't fight the Fed, is the first time you're aware of that statement. I'm not necessarily fighting the Fed. I'm thinking about like what happens if they admit they've got this wrong, right? Inflation, they're convinced, there's no question there's bottlenecks in the supply chain, and that some of this stuff is transitory. It will get fixed over time. It's actually getting worse. It's not getting better. If you have a chance to fly over Long Beach, California at the port, and see 50 container ships that can't get unloaded because they don't have dock workers and there's too much, everything's all screwed up in the supply chains. And this isn't going to get any better anytime soon, in my opinion, most of this. I'm encouraged to see that when the Soho House went from $14 an hour to 22, they filled all their spots. And I'm doing that anecdotally. I don't know exactly the rates, but the GM told me something like that. So that's good because people go back to work. The country needs that. It can't recover fully without the restaurants, the stadiums, the ports, the drivers, but I think the Fed is wrong on inflation, and whether they respond to it or not, they're running a great off-the-grid experiment. The whole world is. You know, there's printing. That's why I own the Bitcoin, because it's like I don't know what else. I don't know how to hedge it. I mean, you could say one day if you woke up and they said, you know, the U.S. will have a $30 trillion deficit, cumulative deficit. You know, you'd say, oh, the paper's worthless. It can't ever be repaid. I mean, and people get nervous, and the dollar weakens, and the Chinese get their way, and the renminbi becomes the currency of choice. I mean, all hell will break loose. I just worry about the downside because my dad said, worry about the downside, the upside takes care of itself. Right? We try to, like, we're active. I'm not sitting on the sidelines. We've invested more this year than we ever have in the history of the firm. But my job is to worry about what could go wrong. The right part we all got. What could go wrong? How do we keep ourselves from losing the money we've made in the last 5 years? It would be nice to have some of it if the world ended. So, and I think you got to be careful. I mean, cash isn't a terrible thing to have right now, in my opinion. 20% cash, 15. Even if it earns nothing, there may be an opportunity that the world cracks, and you won't be able to get the liquidity when the world cracks. You're kidding yourself. So.
Are you excited or worried about automation and how it impacts your business in terms of industrial, hospitality?
I'm excited or worried about automation. We started a prop tech group, and I think it's offensive and defensive, right? If I can run my multis better than the next guy, or I can run a better utility bill, or I can run a better labor scheduling program, or I can make the barbecue more attractive. Nobody's using it because I can follow the people around my property and nobody's going over there, so what else can I do to get revenue out of that multi where the barbecue is? That's cool. That's all going to become competitive advantages. So that's, and then, I might think the other guy's overpaying, but he can run the property much more cheaply than I can because he's got all these automation tools. I need to know about it. So we've set up our prop tech in something called, Smart Rent. We invested in their pipe. It's a nice product. It's not a great product. It's a nice product. There'll be something better, I'm sure. But being able to control your lights and your door from your phone in a B-class apartment with a suite of stuff is interesting. And they'll pay for it. So there's a lot of stuff that's interesting in technology that I think we have to be aware of. The bigger question, which I thought you were asking, but you probably weren't, is workforce. And I think the U.S., it's terrifying. These self-driving trucks, 6 million truck drivers in the United States. I mean, what are they going to do for a living? And the government, not this stimulus, take $100 billion of the 1.2 trillion stimulus package and do job training, train them for the jobs that are available. Like, all they have to do is look at the 10.5 million open jobs, categorize them, and then train the workforces for those jobs, because there's a return on that investment, whereas keeping people on unemployment that's just not going to work. It can't take enough money from the rich to keep the entire nation not working. It just doesn't work. But don't tell the left that. They think.
All right, one more question, then we'll wrap it up.
No chance. I mean, I would do it if I'm not good when people tell me, like, why'd you stop why do you beat your wife? It's like, you'll always be on the defense, and they'll come after you. It's just such a disgusting media. I would love to do it, but I was on the board of my university for 12 years. And I have to say, being a CEO is so much easier than being a politician, because you get to make the decision when you're a CEO. And you kind of explain yourself, but you make that final choice. Unfortunately, in democracies, you have to listen to people that probably aren't qualified to have an opinion, but they have one nonetheless. And there can be more of them than there are of you, and you lose. So I think I'd find it extremely frustrating.
Okay, thank you.